Corrective waves. Corrective waves, as the name implies, correct or retrace the movement unfolded by the motive waves. These waves give respite to the fast-moving market. We can see all retracements, all pauses, and where markets move sideways unfolding as corrective patterns. Numerous variations exist within the corrective patterns, but we can broadly divide them into three classes: sharp patterns, sideways patterns, and triangles. In sharp patterns, named zigzags and double zigzags, we see a swift retracement of the markets. Sharp patterns normally tend to affect a deeper retracement of the earlier impulse. In sideways corrections, named flats and double trees, markets unfold a shallow retracement over a prolonged period, appearing to generally waste time within a narrow price range. The triangles are also a sideways correction, but triangles are made up of 5 waves. They are the only corrective pattern to unfold in 5 waves. A fourth kind of corrective pattern also exists. It is a combination of the above patterns. We shall look at the combining corrections in detailed analysis of each pattern. All corrective waves unfold as 3 waves. Triangles, while unfolding in 5 waves, are also included in correctives for specific reasons, as we shall see later. For ease of nomenclature, all corrective patterns, including the triangle, are called threes. Let us now look at the different corrective patterns.